Good afternoon, everyone, and thank you for joining us today for this tax information workshop. I am Robin Kelly, the Congresswoman of the 2nd Congressional District. I would especially like to thank the representatives from the IRS and the Taxpayer Advocate Service for making themselves available to assist my constituents with their tax questions. I know how stressful tax time can be, and sometimes help filing taxes can be too expensive or too difficult for folks to assess. This year, especially, many folks who receive COVID relief funding, whether as an individual, a couple, or for a small business, have questions about how this will impact their filing process. So I hope that today you'll be able to get your questions answered and to help get the help you need. Excuse me. I'm going to turn things over to my staff to get us started, but I wanted to thank our Economic Development Advisory Committee for helping to put this together, and my staffer, April Williams, for helping to put this together, and Luis Rodriguez. I really, really appreciate your help. Again, thank you for joining us today, and please be sure to reach out to my office if you need any further assistance with IRS questions. Thank you, and I hope you get a lot out of this. Take care.
Thank you very much, Congresswoman. I want to welcome everybody to our tax information workshop. We had one yesterday for individual and joint filings, and today is for our small business. We have Michael Madrasic, hope I said that correctly, he's a senior stakeholder liaison from the IRS Communication and Liaison Department. So Mike, I'm gonna turn it over to you, and please share your screen and just inform us of everything we need to do to file our businesses.
Well, thank you, April. And thank you to Congresswoman for allowing IRS to come in and present this information, some very important information, we think, for small business owners. So today, what I plan to do is to provide information on IRS resources for small business owners and to talk about the tax credits that have been put in place to help small business owners get through this COVID-19 period. So we are going to talk about, in terms of the tax credits, there are 3 tax credits and 1 employment tax deferral that we'll talk about. The credits are the employer tax deferral. The employee retention credit is the first tax credit we'll talk about. Then we'll talk about paid sick and family leave credits that are available for small business owners. And then we'll talk about an employment tax deferral. And these credits and the deferral are all in place to try to put cash into the hands of small business owners to help you get through this COVID-19 period. So we're going to start off first by looking at, and that's the agenda that we just talked about. I'm going to start off by looking at some of the IRS resources that are available for small business owners. And the first thing that you see here is a screenshot, this slide, of a small business self-employed tax center that's available for you on irs.gov. It is intended to be a one-stop resource for you to take you from, if you're an individual who's never owned a business before, to take you from that point and lead you through step by step on the steps that you need to take and the information that you need to understand to take care of your federal taxes, both income taxes and employment taxes, those responsibilities. So it's really a great resource, and what we're going to do over the next few slides is to take you through kind of step by step if you were an individual coming to this for the first time, what you should look for, what's important to review. So as you see here, if you were to go to irs.gov and you're looking for this initially, let's go back to a slide. You can see here at the top left hand of the screen, the trail. You would start at the IRS webpage home, which is irs.gov. Then you'd go to the file icon here at the top. Once you clicked on that, you'd see a link for businesses and self-employed, and then another link for small business self-employed. And that's where we're at right now, the Small Business Self-Employed Tax Center. You can see there's not only do you have English language, but you have other languages as well, where you can get your information in the language that you prefer of the choices that are available there. So let's go on. Once you're in that Small Business Self-Employed Tax Center screen, you can see the resources that are available for you. Identified here in the boxes, information for self-employed individuals. Now, self-employed individuals are usually filing a tax return called a Schedule C. And if you're typically self-employed, filing the schedule, well, if you're filing a Schedule C, you're what's known as a sole proprietor, meaning that you're not incorporated as a corporation, you're not in a partnership, you're just out there conducting business without a business structure. And we'll talk about business structures in just a second. As you keep going down the list, you can see you've got information about a business structure, whether you should incorporate, form a partnership, and several other types of structures. If you have employees, there's a link there. Businesses with employees, specific industries and professions, there's information for those specific industries and profession at that last link there in the information for box. If you go over to the right, there's a box for preparing your taxes, giving you an understanding of, as a small business owner, the types of taxes, federal taxes that you need to be aware of, filing returns and paying those taxes. Off to the far right, of course, there's the box filing and paying taxes. We're trying to ensure that everyone use electronic methods to file your taxes and pay your taxes. That's easier and convenient for you. If you do refunds, those refunds come back to you faster using electronic methods. And it also saves all of us as taxpayers money. The electronic means are much cheaper than filing returns on paper. And the vast majority of people and organizations these days do file electronically. At the bottom left, you see a box, stages of owning a business. And we'll take you through the first stage, starting a business, here in this presentation, just to give you an idea of what resources are available for you. And then there's general topics and online learning. We really want to emphasize, you will be here for maybe 45 minutes or an hour today. Our intent today is to show you the resources that are available for you, and that are available for you 24 hours a day, 7 days a week, to help you with any questions you have. And you can see in that far right bottom corner, online learning. We've got a lot of online learning that's available for you, and we'll get into that in a little bit. But as I mentioned, we're going to start here with the Starting a Business webpage on irs.gov. And what do new business owners need to know about federal taxes? And it is the starting point. And we'll go through the list there that you see, the clickable list. Is it a business or a hobby? You need to make that distinction first. If you were running a business, should you select a business structure? We talked about that just a minute ago. Are you a sole proprietor where you're not incorporated, or is it better for you to incorporate? Employer identification numbers. People running a business, you'll need an employer identification number. The IRS makes it easy for you to get that employer identification number online. And then we'll talk about those other items that are listed there. Business taxes, the need for record keeping, checklists for starting a business. So as you can see, there's just a lot of tremendous resources that are available for you as you start off or if you're operating a business. So the first thing you need to do if you're starting a business is determine if it's a business or a hobby. Now, generally, an activity qualifies as a business if it's carried on with a reasonable expectation of earning a profit. And in order to make this determination, taxpayers should consider the following factors. Does the time and effort put into the activity indicate an intention to make a profit? Does the taxpayer depend on that income from the activity? If there are losses from the activity, are they due to circumstances beyond the taxpayer's control, or did they occur in the startup phase of the business? Has the taxpayer changed methods of operation to improve profitability? Does the taxpayer or his or her advisors have the knowledge needed to carry on the activity as a successful business? Has the taxpayer made a profit in similar activities in the past? Does the activity make a profit in some years? Can the taxpayer expect to make a profit in the future? So the IRS presumes that an activity is carried on for profit if it makes a profit during at least 3 of the last 5 years, including the current year. At least 2 of the last 7 years of activities that consist primarily, I went a little, I'm sorry about the last sentence, never mind about the last sentence. So, first thing you do, determine whether it's a business or a hobby. I apologize for that. But let's talk now about, you've determined it's a business. Should you select a business structure? Well, the easier thing to do, but not necessarily the best thing, is a sole proprietorship. And if the sole proprietor is someone who owns an unincorporated business, as I mentioned, by himself or herself. However, if you're a sole member of a domestic limited liability company, you are not a sole proprietor if you treat the LLC as a corporation. Now, you could also identify the organization as a partnership, which is a relationship existing between 2 or more persons who join to carry on a trade or a business. You could incorporate as what's called a C corporation. And here the profit of the corporation is taxed to the corporation when earned, and then it's taxed to the shareholder when distributed as dividends. So you're going to get taxed at the corporate level, and also when dividends are passed down to the owner, typically you're included as one of the owners. That dividend will also be taxed on your Form 1040, the individual tax return. There's also an S corporation and limited liability companies, which combine the aspects of corporate protection, but pass down the earnings to you at the individual level. So it's eliminating that double taxation of a C corporation, where the corporation gets taxed on its income, then the dividends get taxed when passed down to the owners. With S corporations and limited liability companies, the income is passed directly from the corporate entity down into the shareholder, and it is taxed just at the shareholder level, with a few items that may be taxed at the corporate level. Now, if you're following on IRS.gov and you're going through the links that we're looking at, the web pages, here I'm giving you an example of what you'll see if you looked at sole proprietorships. The web page identifies what you as a sole proprietor, what tax forms you would be filing to the IRS. So the website is designed, again, to lead you step by step through the process of understanding your responsibilities as the business owner. This is just an example looking at, again, sole proprietorships. The website also provides the same information for corporations, C corporations, S corporations, limited liability companies. If you're starting a business, as I mentioned, the IRS will require an employer identification number in almost all cases. And that employer identification number is something you would apply to the IRS for. And as you can see here, this site identifies for you, if you follow down on the links, do you need an employer identification number? Do you need a new one? How do you apply for one? And if you apply for an employer identification number, it can be done online here at irs.gov. So we try to make it as easy for you as possible, giving you the information up front. You need to determine whether an EIN, which is the acronym, is needed and how you can go about getting it. Now, we want, one of the goals of irs.gov, again, is to provide information to help you understand what is needed to be done in order to successfully operate your business, and especially from obviously the tax point of view, the federal tax point of view. We want you to understand the business taxes that must be filed on a return and paid to the IRS. And that's what this page that you're looking at right now is all about. Now, all businesses except partnerships, the partnership entity itself, must file an annual tax return. So those entities that I've talked about, the C corporation, the S corporation, the sole proprietorship, you're all filing an annual income tax return with the IRS, in addition to whatever state and local tax obligations the business has. Now, the form that you use will depend on how the business is organized. And this is some of the information that's provided on the website, that business structure page that we were just on. Now, if you're an employee like I am of the IRS, every payday, the IRS takes out income taxes from my pay and pays it over to the federal government. Now, the same thing is going to be true for a business owner. Businesses have to pay estimated taxes as you go along during the year. There is, as you can see there, a link for estimated taxes, and that will provide information to help you with that. Now, if you're a self-employed individual, like a sole proprietor, filing that Schedule C, you've got self-employment tax. I, as an employee of the IRS, I pay Social Security tax into the Social Security system. In addition, the IRS pays half. I pay half, and the IRS pays half of the total Social Security tax paid into the Social Security system for me as an employee. But as a self-employed individual, you've got to make that payment into the Social Security system yourself with self-employment taxes. Now, this is a great benefit for you down the road because you can use the earnings that you report to the Social Security system are used to calculate the Social Security income that will be available for you when you retire. Now, in addition, if you've got employees as an employer or small business owner, you've got to pay employment taxes and information on employment taxes for your employees, and the employment taxes that you as an employer are responsible for are identified in that link, employment taxes. Now, you may also have excise taxes that are a responsibility of the organization that you're operating. Perhaps not, but the excise tax information is available there too on the website. Now, a lot of business owners use payroll services, and these are third parties who are taking your employment tax information and filing and typically paying the employment taxes to the IRS. They can provide assistance in meeting filing deadlines and those deposit requirements, and they help business owners take that part of the operation and work for the employers to get that done. Now, a lot of it, as I said, a lot of employers use payroll services, and we want to try to help you understand those payroll services and provide a resource for you to help you understand where you can go and get reputable payroll service provider information. And that is here on this webpage, and it is starting a business outsourcing payroll and third-party payers. And it gives you information to help you understand what you would be getting into if you decide to use a third-party payer to pay those payroll taxes and file those payroll tax returns. So that information is available for you there. And then we also talk about certified professional employer organizations, which are these organizations that are the payroll, providing the payroll tax services to you. But in this case, these are IRS certified professional employer organizations, so that you can come here and get the list of the CPEOs, which is the acronym, to help you get a source of reputable employer payroll organizations to help you if you decide to go that route. Now, record keeping. It's a very important part of this process of starting a business, operating a business, because it's going to help you keep track of your tax situation, help you get the best out of your tax situation to get you the credits and the deductions that you deserve, to so that you're only paying the correct amount of tax. That is the goal here. So record keeping is a requirement. When you operate a business, per the law, you've got to keep records. You've got to keep permanent books and records, including inventories, as sufficient to establish the amount of the entity's gross income, the deductions, the credits that you can take to reduce your taxes, and other matters required to be shown by such person in any return of such tax or information. So record keeping is a very important part of this process, and this web page will help you understand what records you should keep, how you should keep them, and for how long you should keep them. Another item to think about when starting a business is when to start your tax year. Now, you can run your business on a calendar year. You can also use a fiscal year, and that is what is described here on this web page. You can read that information over. You can talk to a tax professional, help you make a decision on what would be best for your specific situation. There's also a checklist for when you start a business, and you can get that information here on this web page, and you can see the trail at the top for how you would get to this particular web page. Of course, everyone working wants to be able to at some point probably retire, and retire with the resources that you need in order to maintain your standard of living. And there are a lot of great retirement plan information that's available for you as a small business owner. Not only retirement plans for yourself, but retirement plans that you can provide to your employees. And that's what this page is all about. There are a lot of great publications that the IRS publishes. A list of them. Partial list is what you see there on the screen. You can see there's a tax guide for small business who use a Schedule C, and these are the sole proprietors that I've been talking about. There's publications for specific expenses that you might have in your business, like expenses to travel or to entertain, or auto expenses that you might have. So you can see a lot of great actual publications, whether they be online, you access them online, or you can print them out and read them on paper. You know, we've been talking about starting a business. In addition, the IRS goes further, and it helps provide information about operating the business. We went through a couple of the items that you see there on the screen: employer ID numbers, record keeping. You can change the name of the business, businesses with employees, a lot of great information. If you employ independent contractors, how they need to be paid, what is taxable and non-taxable income, and so on down the line. Now, the IRS wants to help you. We know this is a lot of information, and if you're operating a business, taxes is just a part of that. And a lot of people rely on a return preparer to help them understand their tax responsibilities. And we want to help you understand how you can select a qualified return preparer. And that is what this screen, this part of the IRS website is all about. How to find information, to find someone to help you prepare your return. Now, it talks about the types of tax preparer credentials that are out there, as you see in the middle section, credentials and qualifications. A guide to how to choose a tax preparer wisely. There's also free resources to help you possibly file your return for free. And you can see the Volunteer Income Tax Assistance Program, the VITA program. They do, if you qualify, I believe also provide resources to help you file as a business owner. And there is a directory of federal tax return preparers with credentials and select qualifications. You can see at the very bottom of the screen in that last paragraph, there is a link to take you to that list, and you can search by zip code. You can see in order to get to this website on irs.gov, you start at home, go up the top left, click on Tax Pros, and then choosing a tax professional. And there is the directory of federal tax return preparers and the website, which is actually a Treasury Department. The IRS is part of the U.S. Treasury Department. It's a Treasury Department website. Now, as I mentioned at the beginning, we want to encourage everyone to use electronic filing options, whether you're doing the filing yourself or you're using a paid preparer, whether that's a CPA, an enrolled agent, the payroll tax providers that we talked about a little bit earlier. We want you to use the electronic filing options. It's for your benefit. It's the easiest, fastest, most secure way to file your taxes, and it's the easiest way to pay your taxes, and it's the easiest and fastest way to get a refund if you are to get a refund. Here's some of the electronic payment options. And one great service, especially if you're using a payroll service to file and pay your employment taxes, the electronic federal tax payment system. This is a free service that's available, and it allows you, if you're having your employment tax provider organization also pay the taxes over to the federal government. The Eftps system allows you to go in and check to make sure that the payments are being made. And we highly, highly encourage you to do that if you are choosing that method of making payments. In the end, the payroll taxes are the responsibility of the employer, not the employment tax payroll service that is actually, if you've decided to do it that way, making the payments. The employer has to ensure that that service is making the payments and making them on time and fully. So use the Eftps system to check on that. Eftps can also be used to pay any other federal tax that you have to pay. Now, some other resources that are available for you. We've talked about IRS resources up to this point. You can go to the U.S. Department of Commerce, the Small Business Administration. That is a great resource, and we'll talk about a few of the resources, loan resources that are available through the SBA in just a minute. So here's some other resources that are available from the federal government for small business owners. In order to get news about what's happening with federal taxes and small business, there is a free e-publication, which is ENews for small business. You simply go to irs.gov and look for the subscriptions. You can just type in ENews for small business in the search box. It'll bring you to the link where you can sign up. All you do is provide your email address, and it is a free subscription. Comes to your email inbox every week, every Friday, and it provides you with information, federal taxes for small businesses, the latest information. IRS is also providing resources through multimedia, IRS videos, YouTube, you can get information, Twitter, LinkedIn, all additional places, resources that you can get IRS information. I mentioned earlier at the beginning, IRS videos. There's an irsvideos.gov resource, and it is available as it's online 24 hours a day, 7 days a week, and there is a tab dedicated specifically to businesses. And you can see some of the resources that are available. One that we want to bring to your attention is a virtual workshop, small business tax workshop. It is 9 lessons. You can choose the lessons that you want to look at, or you can go through one by one in order. And it is a great way to understand and obtain the information that we've glanced over here in this session so far. It is an in-depth identification of what you need to understand as a small business owner in terms of federal taxes. There's also another resource, an IRS Online Calendar, that you can actually download into your computer calendar, or you can go look at it online each day on irs.gov, and it gives you a listing of the due dates for returns, for taxes that are due. It's a great way to stay on top. Even if you're having your return preparer prepare the returns, again, in the end, filing your returns and paying your taxes are the responsibility of the owner, even if you're using a paid return preparer to take care of that part of the business. In the end, it's your responsibility. You've got to make sure that they're doing the work that you've hired them to do. Now, I want to spend the last few minutes here to talk about the credits and the employer tax deferral that I briefly mentioned at the beginning of the presentation. And these were put in place to help small business owners get through this COVID-19 period with the intention of getting cash into the hands of the small business owners. So we'll talk about each of these over the next few slides. The Employee Retention Credit. It helps employers keep employees on their payroll. It's encouraging employees to keep the employees whether they're working or not. And it's available for all employers regardless of size, including tax-exempt organizations. And for 2020, this credit applied to wages that employers pay to their employees between 3/13 of 20 and 12/31 of 20. It's a fully refundable tax credit for employers equal to 50% of qualified wages up to $10,000 of wages paid, so a maximum credit of $5,000 per employee for the year of 2020. Now, the employer would use the employee's regular rate of pay to pay these to compute the wages that are available for the credit. And employers can include not only the wages, but can include the health plan expenses as part of the qualified wages. This would be both the employer and the employee portions of the health plan expenses. However, the employee portion must be the pre-tax contribution of the employee. Now, to be eligible for the employee retention credit, employers have to fall into one of two categories. And they are, the first one, that they were either a business that was fully or partially suspended by government order due to COVID-19 during a calendar quarter of 2020. So the eligibility is based on the calendar quarter. For example, if a restaurant or a bar was shut down or partially closed due to the quarantine. Now, the second category of a business that would qualify for the employee retention credit is a business that experienced a significant decline in gross receipts, meaning that their gross receipts were less than 50% during a quarter of 2020 as compared to the same quarter of 2019. So the eligibility again is determined by the calendar quarter. So let's give you an example. If a gas station that remained operational, but they had a decline in gross receipts, that might be a business that would qualify. And when the gross receipts of the gas station in a quarter of 2020, beginning after March 13th, if that income for the quarter was 50% or less as compared to the same quarter in 2019, then the employer became eligible for the employee retention credit. But it's not until after that first quarter that it would kick into gear. So for example, in 2020, a business has gross receipts that were 48% in the second quarter and 54% in the third quarter of the gross receipts as compared to the second quarter of 2019 and the third quarter of 2019. So the employer became eligible for the employee retention credit in the second quarter of 2020, but then in the third quarter, they became ineligible. And that's because in the third quarter, the sales then were 54% of what they were in the third quarter of 2019. However, in that third quarter of 2020, the ineligibility of the employer wouldn't kick in until the fourth quarter of 2020. So looking at that example, the employer in the second quarter of 2020 was eligible for the employee retention credit. They also could claim it in the third quarter of 2020, but in the fourth quarter of 2020, they were no longer eligible. Now, self-employed individuals also can claim the employee retention credit, but the wages that could be used to calculate the credit could not include the wages that were for the services that the employer owner provided. So only for the other employees, not the employer of the self-employed entity. Now that was for 2020. Let's talk about 2021 now. There were some changes for 2021. You may have heard about the Paycheck Protection Program, which is a loan that is available for small business owners through the Small Business Administration. In 2020, if you had a Paycheck Protection loan, you could not claim an employee retention credit. But that has changed for 2021. In 2021, the Paycheck Protection loan recipients are now eligible to claim an employee retention credit. However, the same wages paid by a forgiven Paycheck Protection loan. So if you took out a Paycheck Protection loan and you used the proceeds from that loan to pay wages, and then the loan proceeds from the Paycheck Protection loan were forgiven, you couldn't use those wages to calculate the employee retention credit. Now, if you were an employer in 2020 and you did not know about the employee retention credit, you can go back and you can file an amended return in order to claim the employee retention credit. Now, the employee retention credit is claimed or identified for the IRS on a Form 941, which is the employer's quarterly federal tax return. It's where employers report employment taxes to the IRS. Now, in addition, in 2021, the employee retention credit is available to employers up through right now, June 30th of 2021. That's where the law stands right now, through June 30th of 2021. There was another change for 2021 in that, remember the cap on wages that I mentioned for 2020, which was $10,000 of wages per employee available to calculate the employee retention credit. Well, that cap is now $10,000, but it's for a quarter. Now it's per quarter in 2021. So $10,000 of wages per quarter per employee in order to calculate the employee retention credit. Now, the percentage of wages has also changed for the employee retention credit. Remember, in 2020, that was 50%. So if I was the employee, the employer could take $10,000 of my wages and then apply 50% to that to determine a maximum credit amount of $5,000 for me as one employee. In 2021, that percentage is now 70%. So it would be $7,000 per employee per quarter in 2021. Now, to determine eligibility for the first quarter of 2021 as an employer, whether you're qualified for the employee retention credit, you can determine if there was a decline in sales of at least 20%, not the 50% that was used in 2020. And you can look in the first quarter of 2021 to the last quarter of 2020, determine if there was a 20% decrease from the gross receipts that were recorded in the last quarter of 2019. One other change for the employee retention credit in 2021 is that qualified health plan expenses that can be used to determine the qualified wages used to calculate the credit, those were expanded. Now in 2021, employers paying these expenses on furloughed employees can take a credit for the health care expenses they pay for the furloughed employees. Now there's a couple more credits here. One is the paid sick leave credit. It's a credit that's available in 2020 for paid leave anywhere from 4/1 of 2020 to 12/31 of 2020. And eligible employers may claim the tax credit when leave is paid for an employee who is unable to work or telework due to the COVID-19 quarantine. Basically, they're subject to an isolation order. If they have COVID-19 symptoms or a COVID-19 medical diagnosis. The maximum credit for an eligible employee was $511 a day for 10 days for a maximum credit of $5,110 per employee. And this is on wages paid to the employee anywhere from April 1 of 2020 to 12/31 of 2020. There's also the paid family leave credit, another credit for employers, available to employers who pay leave for an employee unable to work due to caring for someone with COVID or caring for a child because their school or place of care is closed, or the child care provider is unable to provide those services due to COVID-19. Now, maximum credit is $200 per day per the employee, or $10,000 in total for the employee. And in 2020, it applied to wages paid between April 1 and 12/31 of 20. Now, to claim the credits that we've been talking about, you're going to file the information on the Form 941. Those paid leave credits that we just talked about, they were expanded in 2021 through March 31st. The leave credits, if you didn't claim them for 2020, you can go back and claim them by filing an amended return. The Form 941X that's identified in the last bullet on the screen. And if the credits that we've been discussing exceed the amount of a payroll deposit that would be reported on the Form 941, then the employer can apply for an advance refund. So the credit exceeds the amount of the deposit. The difference is a credit that's refundable back to the employer, and that can be applied for on the form 7200 that's identified there on the screen. The last item to help employers through this COVID period that we're talking about here today is the employment tax deferral, where employers could defer the deposit and payment of the employer's share of the Social Security taxes without penalty. Remember, as I mentioned a little bit earlier, IRS, as my employer, pays 6.2% of my wages each payday over to the Social Security Administration. And that's their share of the Social Security taxes they pay on me as an employee. I also pay 6.2% myself. That's withheld and sent to the Social Security Administration. But here we're talking just about the employer's share. That is their 6.2%. So the employer can opt to defer paying those over into the system. That is for that period that's listed there at the second bullet. You identify your choice to defer those payments as noted in the third bullet there. I want to emphasize the word deferral. It is a deferral. Those taxes do need to be paid eventually, and to let you know when those payment dates need to be made, when they are, 50% of the deferred taxes are due on 12/31 of this year, so 12/31 of 2021. The remaining 50% would be due on 12/31 of 22. But this is, again, another way to try to help employers retain cash in the business to get them through this COVID period. Here's just a little bit of the interaction of the tax credits that we've discussed, and you heard me mention there's some SBA loans that employers can take out that we can get more information about those through the Small Business Administration. But there's some tax implications. We want to talk about that for just a quick minute here. The Employee Retention Credit. If you received a Small Business Administration Paycheck Protection loan, you can take the Employee Retention Credit. Now, there is a limitation. If you take the Employee Retention Credit, you would have to reduce your salary expenses by the amount of the credit that you take. So, for example, say you had $50,000 of wage expense in total, and you used 25%, or I'm sorry, 25,000 of that, or 50% in 2020 as qualified wages used to calculate the employee retention credit. So the employee retention credit is $25,000, which is 50% of the $50,000 of wages. Well, the total wage deduction you can take on your organization's income tax return would just be the $25,000 remaining, the $25,000 of wages that were not used to determine the employee retention credit. It's important to note the credit is a dollar for dollar reduction of your income taxes. So it's always a smart move to use the credits to reduce your tax obligation liability dollar for dollar. Now, the paid family and sick leave credits, if you received a Paycheck Protection loan, you can still receive the credits, those particular credits, but there is an expense limitation. Again, you can't use the same wages that are used as credits as a business deduction. Now, the Paycheck Protection Loan Program, now typically when a loan is forgiven, if I were to be operating a business and take out a loan from a bank, and the bank forgave the loan, meaning I don't have to pay it back. In the year that that forgiveness takes place, the loan proceeds are typically identified as income on a tax return. But under the Paycheck Protection Program, if the lender forgives the loan of the Paycheck Protection loan, that loan is not included in income. So we want you to be aware of that. And it's not forgiven if the proceeds from the Paycheck Protection Program loan are used to pay payroll costs, mortgage interest, rent obligation, and utility payments. Now, another part of this equation is if a loan is forgiven, what happens if the proceeds of the loan are used to pay expenses that are then deducted on an income tax return? Well, the ruling is that for expenses that are used, expenses that are paid with the proceeds of a Paycheck Protection Program loan, and that loan is forgiven, that the expenses paid by that loan, that forgiven loan, are deductible on your organization's tax return. Now, there is one other loan program available through the SBA that we're talking here in the presentation, and that's an economic injury disaster loan. And just briefly, there's two parts of an economic injury disaster loan, and that's an EIDL advance, and then there's the EIDL loan. In both cases, the advance and the loan are not taxable, and expenses paid by both the advance and the loan are deductible if they are for valid business expenses. And with that, I have come to the conclusion of the presentation. I really want to thank you for being here today. I know it's a lot of information, a lot of resources that are available, a lot to take in. We don't expect you to walk away from this to be a tax expert, but we do expect that we've hopefully opened your eyes and given you information and resources that you can use, that you can go back and use in your business, and talk to your tax professional about these situations and how they have an impact on your business to help you get through this COVID period, to help you start a business, to help you operate a business. And I'm really happy that you were here today, and I'll turn it back over to April for any questions that you might have.
Thank you again, Mike, for all of that information you shared with us. I want to ask our attendees, I guess, do you have any questions for Mike? If so, you can raise your hand and then we'll unmute you and you can ask your questions. No questions from anyone? Okay, well, no one has any questions right now. We'll be able, we're going to post this on Facebook also so people can get the information, and Congresswoman Kelly's YouTube channel, so people have it. And if you need anything from us, you can always call into our office at 708-679-0078 and call, and you can ask, let them know, whoever answers the phone, that you saw this on Facebook Live or you attended the webinar, and that you had questions regarding IRS, and that Mike presented it, and we'll make sure this information or these questions get directly to Mike. Thanks again, Mike, for all the information that you shared with us, and hopefully you helped out a lot of people, and once they keep on continually see it on Facebook and on the YouTube, people will tune in and get the information.
Thank you very much.
All right, thank you.